people for years have said, when's it going to happen? You're watching a failure to deliver happen. You're watching the nuts and bolts of that happen. I mean, think about this, Chris. If you go back 10 years ago, I would bet that there were not 300 or 400 tons for the whole year delivered. And you cannot print gold, you can't print silver. So if somebody's standing for delivery, and they don't accept a 20% profit bribe, they want the metal instead, this will end in a failure to deliver. That's going to happen. Is it immediate? Well, it looks like we're in the process of, just simply because of what's standing for delivery in both silver and gold. It's going to happen fairly soon.
Well, I hear you, and fortunately for any of those naysayers out there who say, "Oh, Holter's been saying this forever," we'll get there's
Wait,
intriguing.
Wait, I've been saying that forever. Kiss my ass, because I'm pretty much right.
Yeah, well, you have a testimonial that we'll get to in just a moment. Although, Bill, here's another one that I've been thinking about. If there were never any tariffs going to be placed on England, I'm thinking, well, then why was it necessary to shift the metal from England to the US? And I heard someone say, well, if people are getting, or industrial users are getting their silver from Mexico or Canada, maybe then that becomes an issue, so they'd want to pull the silver out. I'm like, okay, I'm not sure that fully explains it to me, but all right, that's plausible. Yet, if we're not using gold industrially, and there were never any tariffs, I never heard any talk of any tariffs that were going to be on England, why did any gold ever need to be moved from England to the US?
Well, you found out yesterday. What was the number? 300, 400, 500 tons have been onshored over the last 4 to 6 weeks. And now all of a sudden, first notice day, there's 333 tons standing for delivery. That's your answer.
So you think this is new investors who are initiating positions in the West, and that the metal, the gold, we'll stick to gold in particular for the moment, had to flow to New York to meet newly created demand?
Yeah, otherwise you get a failure to deliver, and then COMEX is done. I mean, the COMEX gold fails, COMEX silver fails, and what does that mean to all the other contracts outstanding? Like, corn, wheat, fuel oil, interest rates, et cetera, et cetera. If you prove two contracts to be completely, a complete fallacy where they can't deliver, my past partner, Jim Sinclair, used to pose the question, what is a contract worth if it cannot perform? And the answer is zero. And he posed the possibility of seeing COMEX gold at $10 an ounce offered, no buyers, and physical gold bid at $50,000 an ounce and no sellers.
Well, we did see a divergence in the spread between Bank of England gold and
Yes, we
gold,
did.
so we're not far off. Bill, would it be correct to say, based on what you just said, that at least on the gold side, we'll stick to again, that this idea that the tariffs caused the metal,
No,
is that 100% false at this point?
I don't know if it's 100% false. I mean, yeah, you've got some people who believe that, and I'm sure have acted on it. So you've got some flow because of the tariff news, but I don't think tariffs are a real underlying reason to be onshoring, or for London, Switzerland to be sending, buku amount of gold to the United States. I mean, I think it's pretty obvious. In 300, 400, 500 tons have been onshored. I mean, you don't have to be a rocket scientist to put those two data points together.
Well, thank you for simplifying it for all of the users in the audience. It's the delicate delivery that makes you the big teddy bear that you are, Bill.
Well, I think if you follow that through from start to finish, he's talking about a failure to deliver. I mean, that's the bottom line. And again, I mean, I've said for many years, my thought is that silver will be the one that fails to deliver first. And one of those bullet points is talking about, central banks lend gold, but there is no lender or supplier of last resort in the silver market. So I've thought all along that silver would be what fails first and acts as the pin being pulled on gold's grenade. Uh, I mean, time will tell. It doesn't matter whether gold or silver fails first, but they're going to fail to deliver. And when they fail to deliver, then what is the saying? They become unobtainium. Gold has been like a tractor in first gear. We've not really had any pullbacks. We've not had any. We're not any big smashes, which we've always seen in the past. I guess the biggest news is now we know where that 300 to 400 tons that's been onshored over the last 4 to 6 weeks.
Yeah, well, a lot of good things you mentioned there, and would also like to get your opinion in a moment about it. I hear that 45,000 contracts were just opened up, which is quite unusual at this point in the cycle. Although, man, as I'm pulling up the chart here, obviously there's been a rally for the last year and a half, and if you're following day to day, and then, but I mean, since the beginning of the year, what is that, $540 higher in the gold futures? I hadn't thought of it quite as stunning as that. I mean, I know, geez, that's it would match what you're saying.
Yeah, a couple things. One, you said a year and a half gold rally. When did that start? What started it? Go back to when
2019.
Russia's reserves were confiscated, stolen, whatever you want to talk about, or whatever you want to call it. From that day forward, gold has done nothing but go higher, and that makes sense because foreigners look at Russia having, what was the number, $300 billion sequestered, and foreigners are saying, well, hey, if they can do it to Russia, they can do it to us. And what that's done is it's mobilized foreign sovereign treasuries, foreign central banks to offload treasuries, and they're buying gold with it. And you mentioned another 45,000 contracts. If you look at the volume for the day, I think it was a very low number, like 7,500 contracts or something like that traded. So if that's what traded, then how did they open 45,000 new contracts? What I'm getting at is can the COMEX numbers really be trusted?
Well, I know Dave Kranzler is fond of pointing out how they have the disclaimer. Actually, now whether they're accurate or not is another story, but their disclaimer actually essentially does say that you can't trust them because they say there could be errors, and I know multiple banks have been fined. I did have this handy in case there's the 45,000 contracts there. I don't know if there's anything else you wanted to have in the background and comment on there, but I get your
Yeah,
point.
but look at the volume for the day. The volume for the day was it was a fraction of that. So my question is, how do you open 45,000 contracts if you didn't even do that much volume during the day? Where did they come from? Were they off exchange and now they're on exchange? I mean, I don't know. The math doesn't quite work out.
So there's some degree to which you're sensing that there's at least an indication of something unusual happening, which is also
Right.
okay.
Exactly.
Now, along those lines, obviously we've heard a lot about the metal coming from London to New York, which, I'm thinking about it on one hand is exciting, and there's again indicative of stress. Yet also at the same time, when we're hearing, well, is there going to be a short squeeze or a shortage in London? Even if there were, how do you distinguish? I mean, it's not like the metal disappeared. They didn't throw it into the ocean. So the overall net supply is still there, but when we see the metal shifting its location, what does that actually mean or imply ultimately?
I view it as a fire hose. Wherever the supply is going, there's a fire and they got to put it out.
Okay. And who is it that is taking the metal and holding it at this point now once it's being shifted?
I mean, who knows? Who knows who owns these contracts? But just understand, people for years have said, when's it going to happen? You're watching, you're watching a failure to deliver happen. You're watching the nuts and bolts of that happen. I mean, think about this, Chris. If you go back 10 years ago, I would bet that there were not 300 or 400 tons for the whole year delivered. And you cannot print gold, you can't print silver. So if somebody's standing for delivery, and they don't accept a 20% profit bribe, they want the metal instead. This will end in a failure to deliver. That's going to happen. Is it immediate? Well, it looks like we're in the process of just simply because of what's standing for delivery in both silver and gold. It's going to happen fairly soon.